B, C, D are totally based on risk and treasury. So follow this video completely. Also, I would suggest share it with your friends, all those who are giving CAIIB. Okay. Firstly, download Adda 24/7 app on your mobile. In this app, you will be getting premium study material, current affairs, job alerts, daily quizzes, live classes, plus question banks, plus tests. Everything what is needed for JAIIB and CAIIB, you'll be getting it over here. Also, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting the updates for JAIIB, CAIIB and various banking exams. Also, the important part is you will be getting the free video YouTube series. This is very important. Okay. So definitely subscribe to this, press on the bell icon. These are the 2 new classes for CAIIB starting from January 20th. Okay. So join this ASAP. More on this later. We'll be covering here. We'll be covering all the 4 topics, all the required things for the topics, and you can use the code Y432 for discount. So let's start. Yesterday I had asked you a question for homework, and the question was the YTM of a bond is same as. So what do you mean by YTM? Yield to maturity of the bond is same as the present value of the bond, future value of the bond, the bond's internal rate of return, and none of the above. So what do you think should be the answer? Yield to maturity. Firstly, what is yield to maturity? Okay, what do you mean by yield to maturity? Firstly, what is yield? Okay, yield equals to very simple rule. Say this: yield means yield. Yield equals to coupon amount. Okay, it's not percentage. Coupon amount upon price of that bond. Always remember, yield is always for 1 year. Okay, and if I buy that bond, if I purchase any bond and keep it up to its maturity. Okay, suppose let's say the bond is of 5 years, life is of 5 years. So if I purchase that bond and keep it up to 5 years, then every year I'll be getting the yield, isn't it? Yield for 1 year, yield for 2nd year, 3rd, 4th, 5th, right? So the effective yield for all the 5 years, taking the time value in consideration, that is known as YTM. Okay, it is the effective yield on the bond when I purchase the bond and keep it till the maturity. Okay, so that is the meaning of YTM. So YTM of a bond is same as what? Present value, future value, bond's internal rate of return, and none of these. So what is the answer now? Correct, it is internal rate of return, the effective rate which I am getting. Okay, so that's why I said using time value. Time value is always considered in while considering YTM, yield to maturity. Got this point, everyone? So here you need to get the concept of yield very clear. Coupon amount upon price. Okay, now this yield concept is not only used in bonds, it is used in any market. You can use the same yield in stock market also. If you want yield in stock market, it is simply dividend which I get, right? Dividend per year upon the price of that bond, of that share, right? That is basically yield into 100, of course. Everything is multiplied into 100 here also. Okay, because it's in percentages. Okay, move on. Risk is defined as uncertainties resulting in. Means what is risk basically? See here, the topic is risk in banking business. Okay, so what is risk? Suppose if I ask you, okay, there is a person who climbs on the 5th floor of the building. Okay, 5th floor, he is there standing over here and he is saying I'll jump now. Okay, is there any risk involved in that person jumping? Many of you will say yes, there is a risk of death. No, there is no risk. Why? Because you surely know this person is going to die. You surely know this person is going to die. Risk happens when there is an uncertainty whether somebody will die or not. If that's an uncertain, then it's called as risk. Similarly in banking, if you invest in FD in some good bank, FD in some good bank, nationalized bank or private bank, good private bank, then is there any risk in that FD? No risk, because you are getting whatever has been promised to you. Risk arises when you invest in, let's say, stock market. There you don't know the returns. So risk is defined as uncertainties resulting in adverse outcome. Adverse in relation to the planned objectives or expectations. Means Whatever I had planned, I'll be getting, let's say, 10% per year, but I don't get it. In stock market, this thing happens mainly on stock market. So I invest somewhere expecting it to give me at least more than FDs. But sometimes what happens, the market doesn't work at all. In, let's say, in this 2022 only. 2022 there was no growth in the market, right? Stock market. So those who had invested in beginning of 2022, they didn't get any major returns in 2022. Okay, so that's adverse outcome. Adverse variation of profitability or outright losses. So variation of profitability, see this, variation of profitability means this is also an important part. Suppose 1 year I am getting the profit of, let's say, 10 crores. Next year I am getting the profit of, let's say, 2 crores. Third year I am getting the profit of again 7 crores. So this is known as variability. There is nothing constant over here. So this is basically uncertainty. So risk is defined as adverse variation of profitability or outright losses. There can be losses also, isn't it? So the answer is C, both A and B, or A or B or C. Definitely not D. Okay, so answer is, everyone, C, correct. Very good. See here, you need to understand the concept of this. Adverse outcome means this is negative part. Adverse variation in profitability means it is less positive. See here, it's not negative, it's less positive. Means if I am expecting 10 crores first year I am getting, second year I will expect around 11 crores. But I am getting 2 crores. Am I in losses? No. But my profit is lesser, right? Financial risk is defined as, so what is financial? See here, we are in banks, so we'll only be considering only financial risk. Remaining risk we are not concerned as of now for CAIIB, right? So financial risk is defined as uncertainties in cash flow, variations in net cash flow, uncertainties resulting in outright losses, and all of the above. Now many of you will type what? D, all of the above. Everyone is typing out D, all of the above. Is it? Yeah. Or is it? Okay. Agreed. The answer is D. Now tell me one important part. What do you mean by uncertainties in cash flow and variations in net cash flow? What do you mean by this cash flow and net cash flow? What is the difference between that? Cash flow and net cash flow. The difference between net cash flow is, here, cash flow means if I am doing the business and my sales are, let's say, 1 lakh rupees. Sales are 1 lakh per month. So my cash flow is what? 1 lakh per month. This is my cash flow. Okay. What is my net cash flow then? Net cash flow means if I am getting 1 lakh rupees sales, but there are expenses involved. The expenses are, let's say, 40,000. 40K I'll write it. These are the expenses. Okay. So when I say these are the expenses, my net cash flow becomes what? My net cash flow becomes 60K, subtraction, right? So this is net cash flow. Got that point? See here, net cash flow means incoming minus outgoing, and cash flow means only incoming, whatever I am getting as a sales. Got it? Clear? Move on. Everyone click the like button. Everyone kindly click the like button right now. Okay? Type yes in the comment section if you have understood this. Uncertainties in cash inflows and or outflows create uncertainties in, means if there are uncertainties in cash inflow or outflow, means what? See here, let's say this inflow. Okay, it can be this case also. 1 year I am getting 10 lakhs, next year I am getting 2 lakhs, third year I am getting again 8 lakhs. So these are uncertainties in inflow. What is outflow? Same logic. Outflow, 1 year my expenses are 10 lakhs, next year it is 2 lakhs, third year it is 8 lakhs. So these are all outflows. So uncertainties means not constant. Okay. So uncertainties in cash inflow or outflow can create uncertainties in, firstly, net cash flow, number 2, profits, both A and B, and D is none of the above. So suppose if there is uncertainty in inflow or outflow, so that will definitely result in what? Cash flow, net cash flow. Because net cash flow is what? Net cash flow means whatever cash is coming into me minus whatever expenses are going out. So A can be the answer. Definitely that will affect B. right? Because profit. So the answer, real answer is correct, C. Okay, this is your real answer. Which of the following is not correct? Lower risk implies lower variability in net cash flows. Here we want no, not correct. We don't want correct over here. Okay. So lower risk implies lower variability in net cash flow. Means lower risk means my cash flow will be variability. Variability means what? If 1 year I am getting 10 lakhs, next year I will be getting around 10.5 lakhs. Third year I may get something around 10.75 lakhs, okay, or 10.5 only nearby, 10.6 or 10.25. It can be lower also, okay. So less risk means less variability. It's nearby 10, okay. Then higher variability in net cash flow may result in higher profits or higher losses. Same logic, 10 over here. Then it can be higher variability. So it can be 15 lakhs next year. Next year it will be 9 lakhs. So 10 to 15 to 9, high variability. High risk would imply higher upside or downside potential. So if I am having a higher risk, does it mean higher upside? Yes, it can be. For example, suppose if I purchase one share, okay, any stock, so that stock can next year go to this level, right? From 10 it may go to 100, right? And if I purchase some stock at, let's say, 500, it may come down to, let's say, 20 rupees also. So high risk would imply higher upside or downside potential. So what is which one is not correct? I want not correct, okay. So let's see each one. Low risk means this, okay. Net cash flow, it is correct. So it is correct, I'll write it. See, this is correct, okay. Higher variability may result in higher profits or higher losses. This is also correct. Then higher risk would imply higher upside or downside potential. So this is also correct. So what is the answer then? This is the answer. None of these, okay. All of them are correct. Got it, everyone? Now before moving ahead, about the two batches which are being conducted, okay. January 20th the batches are starting for CAIIB, English and bilingual. We'll be covering all the numericals, objective questions, theories, what all case studies are required for all these ABM, BFM, ABFM and BRBL, all the 4 subjects, okay. So that's why join these batches. Also for the electives you will be given separate sessions also for those, okay. So join these batches ASAP, okay. This is very important. And about the discounts part, I'll tell you about the discounts, okay. So I'll tell you at the end. Before that, let's go to the few more questions over here. Uncertainty with regards to interest rate at which the future cash flows could be reinvested is known as, means here, this is again related to risk, means regards to interest rate at which future cash flows can be invested. Means suppose if I get some, this year I am getting 1 lakh rupees, okay. Next year I will be getting, let's say, 2 lakh. Next year again 2 lakhs. Suppose if I am getting this way. So the future cash flows which I have to invest, will I get the same rate of interest, same rate, ROI, or will I get some different ROI? If this year I am getting 10%, next year will I get 10 or will I get 6%? So this is known as the reinvestment risk. Means reinvestment risk, interest rate risk, gap or mismatch, and none of the answer is but obvious. At which it can be reinvested. So the answer will be definitely A, reinvestment risk, correct? When a bank borrower or counterparty fails to meet its payment obligations regarding the terms agreed with the bank, it is called as, see here, this is a very important question because 3 types of risks you have it in BFM, okay. One is this credit risk, second is market, and third is ops. So when the borrower, suppose this is a bank, okay, bank has given a loan to the customer, okay, loan. So if this customer does not repay the loan, no repayment, okay, let's say this is no repayment. So this is known as which risk? Market, operational, liquid, or credit? Okay, the answer is credit risk, correct. D, credit risk, okay. Always remember few points. Market risk is not in your hands. Russia invading Ukraine, okay. COVID situation. These are all the cases of market risk. Operation means your own employees creating some problem, or your systems getting down, or any terrorist attack happening. These are all operational risks. Liquidity means financial. Okay, there is no money with you. It can be either for principal or for interest. So the correct answer over here, when the borrower does not pay the money, okay, or EMI or the loan, it is called as credit risk. When a bank chooses the wrong strategy or follow long-term business plan which might lead to its failure, it's called as, means, let's say I'll give you an example. Many of the Nokia is a simple example, isn't it? Nokia, this company was a biggest company in mobile telephones, right, in 2004 to 2006. But now what has happened of Nokia? Gone. Why? Because it didn't check the Android system which was coming in. Android as well as this Apple was related to I. But Nokia didn't go for this Android phone, and there they made the mistake. That there was one mobile that's known as what? BlackBerry? Yeah, BlackBerry. BlackBerry was one of the most sought mobile, right, in 2005 to 2008. But what has happened? Where is BlackBerry now? Gone, right? Similarly, in banking also, there are many banks, Lehman Brothers, okay? But Lehman had a different problem actually, long-term strategy. It was not related to that. Many of the cooperative banks, I'll tell you, or even the many of the private banks, okay? These even nationalized banks, some of the nationalized banks here, if you don't know, check what is going on in this world, then the banks will definitely have a problem. Okay, so this is known as which risk? Credit, operational, market, or strategic. There is other word to strategic risk. This is also known as business risk. Business, okay, business risk. So the correct answer is D, right? Strategic risk. Okay. Now this one is for homework. Return on zero risk investment would be a dash as compared to other opportunities available in the market. So if I am having zero risk investment, okay, then the returns would be high, low, medium, high or low, depending upon the type of investment. What should be the correct answer? Give me tomorrow. Tomorrow I'll give you the right answer, okay? So now let's come to the batches again. See, these two batches which I have told you will be covering all the 4 subjects plus all the numericals, objective questions, everything, okay? Now let's check the discounts. Use the code Y432. Always remember, never forget this code, okay? Now let me get you to the discounts. Let's go to Adda 24/7 live, okay? If I would suggest, if you are having the app, go for the app. That's the best thing. In the app, you will be getting 1% extra using the coins, okay? There is a coin system available. So you can earn 1% extra discount over there. So click on JAIIB and CAIIB over here. So you will see this JAIIB, CAIIB 23, JAIIB 23. Click on CAIIB 23. Okay? These are the batches. See this January 20th batch which is coming up. Click on the batch. Okay? In the batch, you will see the details are given over here, the timings are given, the dates are given, the study plan is given, okay, everything is given over here. Check that at your ease, okay, take your own time. And mainly I'll tell you, the recorded videos are available 24/7, so that if you miss out the class anytime, you can definitely get it again. Second, interactive classes means you can ask the questions anytime. Any question in your mind, you can ask it anytime. Okay. Now let's look at the fees. 23,999. Click on view offers. Once you click on view offers, see this. Put the code. Enter the code Y432. Click on apply. So once you click on apply, see the fees. Now it is 23,999. It reduces to 5,519. 77% off you are getting. Such a huge discount you are getting. So you can definitely go for it. Also, I would suggest, instead of going for a single class, you can go for multiple classes. Multiple classes means, if you click on this Mahapack, look at this, see this. Go to the front page again, JAIIB and CAIIB, see this JAIIB, CAIIB Mahapack. Click on the Mahapack. If you click on the Mahapack, you will see this. JAIIB, CAIIB Mahapack, JAIIB Mahapack, CAIIB Mahapack. As you are in CAIIB, click on CAIIB Mahapack. Okay. Again, you will get the details over here. All the details here. The details means, what can be the details? Look at this. 15 plus batches for AB and BFM. 15 plus batches means what? Even if you attend the batch singly, even if you attend each batch once per subject, then also you will learn that topic, because 15 times the revision will be done. Okay, so go for it immediately. Also recorded videos are but obviously available. This interactive classes are there. Each one is an interactive class, right? So now 35,996 is the fees. Click on the view offers. Let's see the discounts again. Never ever buy anything without discounts. Okay, Y432. Click on apply. Okay, see now the fees of 35,996 reduces to 8279, 77% off. Okay, so definitely go for it. The validity is 8 months over here. Definitely go for it. Why? Because the portion for CAIIB has changed now. The new portion, I'll show you what is the new portion. Okay, the portion for new portion, those who don't know, okay, and those who know, they also need to revise it again and again. Okay, the new portion is ABM, BFM, ABFM, and BRBL, legal, banking regulations and business laws, and here it is advanced business and financial management. These two new topics have been added. Electives also, there is no retail elective, rural HR, IT, central banking and risk. Also negative marking. See here, negative marking is gone now. That's something good for you guys. Okay. Otherwise, what would have happened? It was really difficult if there was a negative marking. Subjective questions are there, but you will have to answer some questions which will be solving the case studies. Okay. So now I'll take the leave. Tomorrow I'll be back with another